Good afternoon and welcome to Capital Account. I'm Lauren Lister here in Washington, D.C. These are your headlines for Friday, August 17th, 2012. The Fed's hawks are speaking out against the central bank taking more action. This is according to the Wall Street Journal. But let's talk about why so much attention is paid to the whims of central banks around the world. Is it because for years investors' perceptions about central bank power has mattered most to markets and perception has been reality? We'll discuss if the power of perception is running out. And though it is the peak of summer, let's talk about winter, a Kondratieff winter to be exact. Why? Well, it historically features high volatility, slow to negative growth, delevering by consumers, corporations and governments, hoarding of cash by banks, asset deflation, and economic depression due to bursting of unsustainable credit bubbles. Sound familiar? I think so. Peter Baxter will explain why he thinks we're in a Kondratieff winter and where the economy should be headed based on these seasons. Here's a hint. There's hope, but it's going to get worse first. And early Facebook investors were set free to sell stocks, sending the price down to new lows. This is despite disasters, or this is a disaster, despite disasters like this, I should say. The broader trend we've seen in stocks has been, they've been rising, while Treasury yields have been at record lows. Our guest will tell us what he thinks the bond market knows that equities don't. Let's get to today's Capital Account. So looking at the news and trying to figure out, are we headed for inflation or deflation? Or which asset class is telling the right story, stocks or bonds? They're sending contradictory messages. And how much longer is the economic malaise going to last? Wouldn't it be nice if there were a tried and true roadmap to guide us to the right answers? Well, maybe there is. Kondratieff wave theory. Now, this theory comes from Nikolai Kondratieff's study in the 1920s of historical data on agriculture and manufacturing, where he went back decades, even centuries, and identified striking patterns of boom and bust occurring in intervals of 54 to 60 years. Now, it was introduced to the modern age in Kondratieff's treatise called Long Waves, Cycles, and Economic Life, doomed to obscurity, though, on account of Kondratieff being sentenced to the Gulag and his theory being upstaged in the time by Keynes, whose theories may have been more conducive to politicians as a way of justifying public spending. But it's relevant today nonetheless, says our guest. First, let me set this up a bit. And I'll warn you, this is a seriously simplified version of this chart, but I want to explain before we get into the interview, because these patterns are divided into 4 seasons you can see here, exhibiting specific trends when it comes to these aspects: confidence, inflation, credit, and interest rates. Also assets that perform the best, but I'll get to that too. Now, where are we now? We're in winter, and I should mention that spring, summer, autumn, and winter correspond with expansion, inflation, plateau, and depression. So winter is not good. But first, how do we get here? Let's talk about autumn. So autumn is marked by confidence, which goes to euphoria, and inflation is going down. Credit is going up, principally to consumers, and interest rates are going down throughout. So we move on from autumn to get to winter, which is right over here, where that euphoria, well, that didn't work out too well. But what we see is that euphoria turns into outright panic, concern, and fear. Inflation continues to go down, but it descends to outright deflation. We see a credit crunch where credit virtually disappears. It's not flowing, and interest rates fall. They go up during the credit crunch, but then they fall much lower. And I should mention, the ideal performing asset classes in autumn are stocks, bonds, real estate, or excuse me, stocks and real estate, also bonds too. But in winter, after that crunch, it's still stocks, but also gold and cash. So how does theory stack up with reality, and how can it help us understand the future? Well, joining me to hash it out is our guest today. He is Peter Baxter. He is author of KondratieffWinter.com, and he has studied all of this, so he can tell us much better than I can with that kind of subpar description of his fabulous chart, what this all means. So first, I want to thank you so much for being on the show.